Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. So the Apple and Tesla stock splits are official, as are the adjustments to the Dow Jones Industrial Average. We'll talk about that, implications going forward. Big news over the weekend from Friday was probably this news out of Beijing that they're going to potentially poo-poo this TikTok sale. We'll talk about that. Trading action in Walmart, Microsoft, and Oracle, not great this morning. We've got Zoom on our radar. They report earnings after the close today. A couple of analyst quiet periods are over. Rocket companies and Big Commerce, so a lot of ratings on those two this morning. We have an M&A deal, Nestle buying AIMT. We'll talk about that. Our guest today is Scott Shellady, AKA the Cow Guy. He will join us at the end of our show at 8:50. So we'll do ticker time before that, and we'll bring Scott on for the final few minutes of the show. I will throw it to Joel now. Joel, recap for us, if you will, the overnight trading session.
Good morning, Spencers and traders. Nice overnight move. We continued on that strength on the close, also from that 4:30 to 5 period. We got up all the way to 35.24.50, folks. There is nothing up there because this is old new territory. So similar to Friday, you have a nice target above the market. We'll keep an eye on that. We're $3 off the pre-market low. That's $4 above the close. So in order to get to scratch on the session, that old time closing high from Friday, 35.04.50. Taking a look at crude oil here, crude is trying to move away from the $43 area. We've talked about this over the last couple weeks, up 46 cents at 43.43. Gold ended the week on a good note, but down a couple bucks here, trying to get back over 2,000, down 210 at 1972.70. Silver doesn't care. Silver's going the opposite way. That's going back for its high of the move at $30. Silver trading up 39 cents at 28.18. And don't look now, Bitcoin went from the lower $11,000 handle, trying to move up here to 12,000, trading up $195 at 11,825. Triple D, long week. I guess it's a long weekend, but a fun weekend. How you doing?
Oh yeah, busy weekends, always busy. With the kids and doing some fishing. The perch are biting off our dock right now. We're just sitting out there, and the boy wants to be out there fishing nonstop. We try to get out there, 7:30 in the morning, because that's when they're biting. We go out there near dusk and dawn. That's when they bite the most. But I had a nice smallmouth bass on yesterday morning. First cast of the day, just feel, it's kind of like a reaction bite is what the bass does. So it hits the water, the hook, and the bass hits it right away. And I'm like, oh, this is a good one. It breaks water. I'm like, oh yeah, this is a nice one. I'm bringing it in. And then it pops up right by the dock and it spits it out. And I didn't get it in, but I saw it. I fought it for about 30 seconds. So I saw it, but nice.
Do you bring them in and then take the hook out and then cut the head off and scale them and eat them and everything?
We're mostly catch and release. So
man.
Yeah, we're friendly. We're environmentalists here, so we're mostly catch and release. But we will have the odd fish fry. So not vegan. I tried that vegan thing, remember, for 2 weeks, and it was good, but not that good. So we love the animals, but we also like to eat the animals.
Okay, let's where do you want to go? Should we talk about the TikTok battle? Should we talk about the Apple and Tesla
Let's talk
split?
the split. Let's talk Tesla. Let's talk the split. Unbelievable 4 a.m. trading if you were so inclined to get up at 4 a.m. because they decided that this was just going to blast off and go back to $1,000. And they bought this thing at the 4 a.m. open up to $470. Anyways, the way I've said with splits is typically they're very strong ahead of the split. They open fairly strong on the, and I said, there's often an opportunity to buy the stock long overnight, take it, get the split, and then sell it the next morning after post split, which is today. So if I was long Tesla for a trade, this is where I'd be ringing the register. If I would have been up at 4 a.m., 470 would be nice, 465 would be nice, 460 would be nice. You've already leaked most of the gains on Tesla. If we go by the book, quantitatively looking back, and obviously maybe selective perception on my part, but like I said, I used to trade these splits all the time. They typically show weakness for a couple weeks after. So I'd be careful buying Tesla here.
All right, we're trading at the lows of the pre-market session. We came down, we hit that 470, actually opened up 468.10 and then hit the 470.
Unreal.
So that is a new
4 a.m. gift.
Yeah,
4
a.m. gift. You're finding support at 444 right now. That seems to be the area as you can see on the 15-minute, and then I'll make the 60-minute chart. These are all new technicals. I'm gonna let these shake out for a few days. I like Apple being a lower price stock now, so that'd be a lot easier to do levels on, and we'll see what the price action is. But both these stocks strong, very strong ahead of it. Now let's see how they react. Let's see what Apple got to. Did Apple do the same thing?
Yeah, I woke up about 5:30 and I saw Apple up significantly. So yes, Apple pretty much did the same thing. Trade up over 128 this morning. It has already leaked back the majority of the gains as well. They're still in the green. But again, I would be cautious just thinking we're going back to that 128 because, like I said, historically, they tend to open green, meaning 9:30. They're going to open up because you know why? There's some orders. There's even some brokers that are poor at adjusting orders and trying to figure out the splits. There's brokers that actually screw that up. And sometimes those orders are on the book and they can hold the opening price up too. So, like I said, they tend to show strength in the pre-market and at the open, and then after the open, they tend to start fading. We'll see if it plays that way. It's already faded most of the pre-market gains, just like Tesla has. So I would be cautious buying Apple here for all those reasons I just cited.
And if you got the scalpel out and you did the math on the Apple, you would have seen the August 24th high was 128.79. That was on Monday of last week. Your pre-market high comes in at 128.29. So there you go. I mean, if you were holding out for 128.79, you didn't get it. But numbers, I think, let's see what Tesla did in relation to its all-time high. That all-time high was made on Friday. That took it out by quite a bit. That was 463.70. Even if you were using that as an exit point, you still got a pretty good sell-off in Tesla. Right now for Apple, and it's early in the session, but after hitting that all-time high at 128.70, looks like someone has a little interest here at 125.5, a 4-15-minute, 5-15-minute candles in a row. But that could just been someone that like sold the daylights out of it, off the 4 a.m. open and just, hey, I'm just going to scalp 2-3 points out of this. I could care less where Apple goes in the regular session or for the next 6 minutes, 6 days, 6 months. So, but glad to see it. Got a little easier trading. Tesla's still a high price stock of $450.
It's unreal that it did this 5-for-1 split and it's still $446. The impressiveness of the run from back in July, really, when the party started. I mean, the stock is up 200% basically since the middle of June. It's an unbelievable move for a market cap the size of Tesla to be growing like that. And obviously, even when Musk was saying that he thought his company was overvalued at $750, and the stock has basically tripled since then. So
and also
unbelievable.
So just imagine, I mean, there are people that were shorting the stock from like 300 pre-split. So
you're just murdered.
So what's that? Like it's like $80 now?
Yeah.
Like
you're just murdered. But
gotta
most of the shorts, have thrown in the towel. Like we've seen that short interest drop substantially.
I don't think that's the case. I think there's
still somebody.
You can look at short interest though, and you got to consider one thing: is sometimes there's hedging tactics involved in that. You can't just take it at face value. I mean, somebody could be long calls and selling the stock short against their calls. And that would show up as, this person is bearish, but they're actually hedged. So short interest, you can't always just take it as face value because there's definitely hedging involved. I mean, when I used to do options, I would never sell this, like sell the call outright. I would often, if I had calls long, I'd often be selling the stock short against it to lock it in. And especially on smaller issues, maybe not so on Tesla, but because the spreads are wider in the options, you don't have to pay the spread. The spread isn't as wide in the equities. So, and that's a different story. With Tesla, it's very liquid options, but there's a lot of other tactics and a lot of other things to consider as opposed to just looking at the short interest and say 12 or 15% of the float is completely burned on this.
Yeah, along those lines, when you hear about these big option trades, I mean, you don't know what the big boys, you don't know if they're covering a position, initiating position, part of a spread, part of a hedge. It's pretty difficult. But anyways, we're leaking a little bit here in the S&Ps. Nothing to get alarmed about. We're 14 handles off the high, trying to sneak into yesterday's range. But that close from yesterday still looks like a good target on the downside. That's a 35.0450. So my question is to the listening audience is, so buying TikTok is bad now, or the deal's not going to happen?
Before you go to TikTok, I just want to say I've got some overall thoughts as Tesla and Apple on the overall market, and then we're going to go into the TikTok talk. But I look at Apple and Tesla here today. They're going to be your leaders. Everybody wants to see how do these stocks react post split. If they can hold the gains, it's very good news for the market. I personally think they're going to roll over just because that's what I've seen stock split stocks do before. If they roll over, just scenario analysis. If Tesla and Apple start to roll over after the open, it will take the rest of tech with it. So just be cautious. I'm very cautious on my tech longs at this point. I've been long, so many different, tech stocks there. I'm selling them out, and I may initiate some short-term shorts on the open if Tesla and Apple start to open at the highs and start to roll over. So keep an eye on them. There could be a good opportunity. That's just scenario analysis. If Tesla and Apple don't start going red, then I'm obviously not going to initiate those shorts. But if Tesla and Apple start going red, I'm going to look to Amazon. I'm going to look to NVIDIA. I'm going to look to a lot of the components in the queues and try to put some swing trade shorts on. Just short term, obviously not betting against this overall market saying this is the top, but I'm just going from the quantitative analysis I've done in the past that if these start showing weakness, it will drag the rest of tech with it. So I'm ready to strike on the short side if Tesla and Apple show weakness. So it's a nice setup today.
And just some words of advice from Mike here in the YouTube chat. Tesla still hasn't been added to the S&P 500.
That's the wild card.
Yeah. And
that's in their back pocket. That's the ace in the hole still.
Yeah. And what's battery day? I'm getting charged up for that. When is battery day?
Good one.
September 22nd.
Okay. I mean, so there's still a lot of catalyst for those.
Oh yeah.
issues.
Yeah. We're not saying it's over. I'm just saying this. Historically, like I said, 2 week run up before is textbook for Tesla and Apple. A 2 week sell off after would also be textbook. Are they going to go by the textbook, or are they going to just have the FOMO and people are just going to buy it anyways? We're going to find out.
Yeah, and also Apple, or Apple, Tesla, wherever they are in your monthly portfolio. This is the end of the month, right? So,
oh wow, you are right.
Yeah,
that's always interesting too. So end of the month is. Yeah, end of the month is always a good, the 3:30 to 4. Sometimes you get some crazy imbalances. Sometimes you get some wicked moves. Sometimes you get some good opportunities. So end of the month is always exciting. So let's go to your TikTok news.
Yeah, this is from Friday. The news that Beijing has basically changed the rules of engagement here a little bit, giving themselves the power to essentially veto any sale of TikTok to a U.S. company. So Microsoft, Oracle, Walmart, I guess, seen as the big three favorites right now, all trading down on this headline this morning. So
can I ask you a question? Aren't we in a trade war with China?
Aren't we just in war with China on everything?
I don't know how to answer that question.
I don't know. Now we're going to buy their company, and I don't want us to buy their company. And I'm glad we don't talk politics on this show because I have no idea what's going on. But anyways, go ahead. Let's talk Walmart giving it back. Now there's not going to be a deal. Microsoft giving it back. This is Oracle down.
Headline driven.
Tough. It's tough.
Headline driven. I mean, Walmart has the ridiculous 10-point pop because they might buy TikTok. I mean, a market cap of Walmart popping on that news was just a ridiculous move in itself. And it was a gift to anybody who was long. It's pulling back here this morning. Gets into the low 130s. There'll be people who potentially are even short of coming in, scrambling for covers. So you've got support if you get down in the lower 130s. They're 136. You're kind of in the middle.
Yeah.
I mean, you could talk a 50% retracement. Maybe this headline comes back. Maybe Walmart does. But remember, Dow Jones broke the headline Thursday night that they were far apart on price. That the TikTok U.S. operations were looking for like 30 billion, and they weren't even close to that. That's what Dow Jones said on Thursday night. And for some reason, I was like, oh, they're probably going to sell Walmart off on this. They didn't. For some reason, they decide, no, we're going to buy Walmart up anyways. And Walmart rallied and made a new high on Friday, which didn't make any sense to me whatsoever. So, you know, now it's government intervention, whatever it is, the political side of it all. But, you know, it's down $4. I don't think it should have been up $10 though. So am I buying it down 4? I think there's still some fluff. Lower 130s, I'd be a buyer in Walmart. 136, kind of in the middle of nowhere.
Kind of middle of nowhere. It just wasn't an easy day in Walmart. It actually ended up opening at the high, and then it came in. It never got to unchanged. It came in, and then it came back and made a run at the high. So it was like it wasn't easy sledding in that. You're right, Dennis. I'm looking in the lower 130s. I'd be licking my chops. I mean, you had
I would too. I would be a buyer in lower 130s.
4 or 5 lows in the same area on consecutive days. And then a lot of people just are like, they're spinning their head from Thursday because they just got rolled over on that day. And now they're trying to get, their stock back. And it had a good earnings report and it sold off after that. So really, I like your 50% on this one, that 130
Sure.
to 141. We're kind of in the middle of that area, but man, like you said, you got to keep, if they do get TikTok, then is it going to go back to 141? And then Mr. Softy's on a little bit of pressure today too. I heard that, the two companies were combining. That has a potential double top in there. That's trading in the pre-market. A little bit harder to find support in Microsoft, but I kind of like that old resistance at the 215 area.
I'd be a buyer down there too.
Yeah.
I'm already long Microsoft, but I'd be a buyer if I wasn't in Microsoft down the 215 to 220 area.
Don't know if we're going to see it. And then the third child involved in this, Oracle. I don't know how serious Oracle's gotten about this. This had a big move, given some back as well. I think I'd be more interested in this. There's a pair of lows near 56 for Oracle, but of course, this all comes down to who gets the deal.
Oracle's the stock that just goes nowhere. I've had this in my portfolio for a decade. The only reason I'm not going to sell out of it is, like I said, I bought it during the financial crisis, and I think my cost basis is $9, so I don't want to realize the capital gain. But this has not been, you think about what tech has done, and old tech just has been out of favor, and Oracle's still schooled up with all that old tech stocks. And those just aren't the stocks that people want to own.
Kind of hanging on though, Dennis.
It's holding up, but it's had the run here because of TikTok. So is it 2 and 3 points of fluff here with the TikTok thing? And then maybe if they don't get TikTok, it's going to go right back down. It's possible. But you really think about Oracle and you think about where the NASDAQ has went and look at Oracle for the last 2 years. I mean, it's like kind of the same place. You look at the NASDAQ for the last 2 years and the NASDAQ is like up 60, 70%. So it's definitely been an underperformer, and that's because it's old school tech. They just don't like Cisco, Western Digital, Oracle, Intel. I mean, they're all kind of in the same boat. So, yes, maybe some of these are showing a little bit of life. The Intel chart's starting to look a little bit with a little bit more life here the last couple of days, but they've been out of favor here for a while.
All right, let's go to
Let's go to Dish and DirecTV.
Oh yeah, okay. There was a few things that were flooding my mind at once. All right, AT&T and Dish. This is from Friday as well. That AT&T is exploring a sale of its half of the of DirecTV that they own. They own it jointly with Dish. This one has been in albatross since the beginning, but apparently they've hired Goldman Sachs to help them offload the stake. Remember, they paid about, I think it was $67 billion in 2015 for their.
It's got to be one of the worst purchases ever.
It's bad. It's bad.
They bought DirecTV at the top. They paid the top. Nobody paid more. And then we went to cord cutting. And then we went to streaming everything. Netflix was, I believe, out back then. They obviously didn't think Netflix was going to come and just take over, and start knocking cable out. But, Netflix was a thing back then. So it wasn't like, oh, we couldn't see this coming. You could see this coming. You could see it coming years ago. And so they've got DirecTV, and now they're looking at options for the DirecTV stake. And then for whatever reason, look, bring up the AT&T chart, Joel, from Friday night, because, oh, look, they're looking at options to sell it DirecTV. They buy this thing up to $31.20. One, this is AT&T. The stock hardly moves. That's a huge move for it. Two, I'm going to say it right now. This is my opinion. Nobody's buying DirecTV. Why? Why do you want to own DirecTV? Unless it's Dish and they're trying to do synergies or something, and trying to get some synergies to try to survive. But who the hell wants to buy DirecTV? And they're definitely not buying it at $67 billion. They're lucky if they get $10 billion for it. I mean, what is it worth? I mean, you've got all these expenses that are coming from it. People are cutting the cords like crazy on it. You can watch everything streaming all the time. What the hell do you need DirecTV for? So I don't think anybody's buying DirecTV. I think the Friday night pop in this was a gift on AT&T.
Yeah,
also, I think the pop in Dish this morning, I think every pop in Dish is a gift. I know the stock has held up actually fairly well, which is somewhat surprising, but I still think cord cutting eventually is coming for them. And it's a streaming world. And unless Dish can reconfigure their whole, world to just be streaming and, compete with everyone else, it's tough. They're cutting the cords.
It's worth pointing out that the head of AT&T, who had overseen this acquisition and also the acquisition of Time Warner, is no longer in charge. That was Randall Stevenson. So he sort of saw both of these through, and these were not good deals. Neither of them. Time Warner,
they weren't good at the time,
right? Well,
we questioned it at the time. I can remember Joel and me analyzing this on pre-market prep. We were doing it 5 years ago and trying to understand, the rationale behind buying DirecTV at these highs. Cord cutting didn't just happen last year.
Just think how much technology's changed since then. When 5 years ago, I don't know, AT&T. I mean, this one has not bear the fruits of this rally at all. I don't know.
Dog of dogs.
It is a dog.
But think about the businesses that are in there. I mean, it's so, there's so much overhead too. And yes, it makes money. And yes, but even the wireless business of AT&T, which is probably their darling, there's competition coming for the wireless business too. Don't kid yourself. I mean, these phones, there is no way. Right now, what are we going to say, Spencer?
I was going to say Apple and Google. Like, why wouldn't they just go there next, right?
Yeah. What's your cell phone bill a month, Spencer? What's your cell phone bill?
God, I just actually switched on with my girlfriend, so she's in charge of that. So I don't know.
Anyways,
sorry.
I'm Canadian. It's like $100 a month. What are you, Joel? How much do you pay for? You're in a package with everybody, but
yeah.
You're $50 to $100 a month, right?
I'm
happy. Yep. I mean, we got like the super full extra data, full packages. So.
That's their cash cow. But I'm going to go on a limb. We'll look at this 5 years from now and see if I'm right. But I think that what you're paying for your cell phone bill today, you're going to be paying a lot less 5 years from now, because competition is coming. They're going to figure out a way. There's companies out there trying to figure out a way to bring these costs down. The competition is coming. I think that eventually your cell phone bill is going to be significantly cheaper, and that is going to squeeze margins at AT&T, and that's why the stock's got a 6-7% dividend, because I believe the market thinks that as well. Obviously, DirecTV is a mess. What else is there? They've had some other bad purchases in there. It wasn't just DirecTV.
Well, yeah, I know.
I mentioned Time Warner. That was a big one.
Well, that's not a good one either. So, I mean,
are we going to need, though? Didn't Mr. Musk come out with like a chip you can put in your head over the weekend? So
he's been talking about the Neuralink.
You didn't hear about that?
Well, it's his Neuralink.
Well, why do you even need a phone then? If you got a little chip in your head, you won't even need a cell phone.
Yeah, I don't know.
What are you talking about?
He's talking about Neuralink. That's the project that Elon Musk has been. That's one of his like side hustles that he's got along with like he's got like a dozen side businesses. Like
we're gonna be cyborgs.
Right.
Yes.
Right. So this Neuralink is a chip that connects to your brain and has, I guess, can help you overcome. I'm not sure if it's like disabilities or if you have a stroke. I'm not really sure. But I guess they got their first test patient recently. So
I'm gonna let everybody else, put the chip in their head first. Like the vaccine, maybe I'm gonna be one. I'm gonna be the first. I don't want to be the first on that either. But I'll be more like in the line, in the queue. I'm gonna wait till Joel and Spencer get the chip in their head first, and then maybe I'll think about going and getting the chip in my head. Because if they start beating me in trading, because they're obviously gonna be a lot faster than me once they have that chip in their head. I'm gonna wait on that one though. Okay. Sorry, Musk, I'm not in line for this.
All right. 8:26. We're gonna bring our guest on at the end of the show at 8:50, Scott Shellady. So we'll do ticker time at like 8:40 or so. I want to go to. Let's go back to my list here. All right. How about Nestle? No. I want to go to Nestle and I want to go to AIMT, Aimmune Therapeutics.
Mm-hmm.
Joel, if this one sounds familiar, it's because Aimmune is the company working on that peanut vaccine.
All right.
You want to call it vaccine or cure?
We wanted to buy this, didn't we?
Yeah,
we would have really took a lot of pain.
Palforzia is the name of the drug. So Aimmune Therapeutics is a food allergy pharmaceutical company. Nestle already owned a quarter of it. Now they own all of it. They're buying the rest of it this morning at quite a hefty premium. $34.50 per share is what they're paying for the rest of this company.
I mean, the peanut allergy, I remember talking about this a while ago on the show, and I was like, oh, I kind of like that, idea of working, on that problem. Obviously, peanut allergy is a significant issue. I mean, I can't send my kid to school with peanut butter anymore.
Two-thirds of this show have it. So
yeah. So yeah, there you go. Peanut allergies, 2/3 of this show has. So it's a significant issue. Man, I wish I would have known this stock was $12. Maybe I would have taken a flyer on it.
Well,
but
Dennis,
I haven't looked at this for a long time. It would have been horrible. It would have been horrible for a long time though. If I was in this, I would have been eating. I probably would have got shaken out because obviously we can see where the stock has went in the last year. It's went straight down. So every shareholder bailed out here by Nestle, and we're back at basically the highs. So you go from the lows to the highs. It's a overnight windfall for shareholders.
Well, they're bailing themselves out because they already owned a quarter of the company. So they're just gonna
bail themselves out too.
That's weird. We're leaking here, folks, a little bit more. Tesla's pulling off a little bit. Apple's still kind of holding.
If they start going red, look out.
Okay.
It will spook the market because it was 470 this morning. What a gift! Why didn't I wake up at 4 a.m.? What a gift! 4:45. I'm gonna say I think it's going red. It's at $2. It's gonna go red now. It can go
red. It can go green.
I think once it's gonna roll over today. That's my opinion. Just my opinion.
Hey, that's why folks are here for. That's why they tune in every day from 8 to 9 a.m. Eastern Standard Time. Get opinions,
thought, and ideas. Trading ideas. Short tech. If Tesla and Apple roll over.
What's on Nestle? NSTLE.
It's
European
counter.
So
trading in Europe.
Yes,
actively.
The ticker is NSRGY.
Do we care?
Yeah, no, we don't.
We don't.
I would just say if I had this thing and I don't, I'd just be like, ching, I'm done, I'm out. I'm not waiting for anything.
I will say AIMT, if you're wondering why the XBI is up so much today, it is all because of AIMT. It is 0.67% of the index. When a stock goes up 172%, you do the quick math and say, hey, that's a 1% move in XBI. Lo and behold, XBI is trading up 1%. So that is why, if you're wondering why XBI is up 1% and the market's flat, it is all AIMT. Right, UT Zebra. I want to talk this one here. Another SPAC becomes a stock. What do we know about UTS? I don't know much about it. It's a snacking company.
It's been around for a long time.
Yeah, and then they decided to do the SPAC back here June or whatever, and now it's actually become. I believe today it has actually become UTS Brands.
Yeah,
so the SPAC actually becomes the company.
So the ticker was CCH, right?
It was CCH.
And now it is.
Is there
easy? Man, every day I learn about a new stock. Last week I learned that U-Haul is public. Did you know that?
Yeah, I traded U-Haul. I used to trade it for years. I actually had U-Haul preferred shares.
I didn't know that until last week or 2 weeks ago.
They
What's the
they
symbol?
reorged a number of years ago. They did some, it wasn't like they just they had to do some reorging and they changed the ticker symbol and did a whole bunch of fun things.
So anyway, off topic, but U-Haul is UHAL. It's a parent company. Anyway, UTZ, UTZ, going public today. They were going to ring the opening bell, I see here, and I guess snacks.
U-Haul has been a drag over the last couple weeks.
Thanks. Was that?
I don't know if we got it.
You don't get that one?
I'm not quite sure I got that either.
You pull your U-Haul.
All right. Okay.
That was a bad one. I'm stretching.
Well, because the stock's been going up.
Well, no, I said the last couple weeks it's been a drag. A pull.
Okay.
A drag. That one. Strike that. Spencer, can you
Crickets
strike that for
one,
the
Joel.
record?
Sure.
Strike that one for the record.
Okay.
Crickets.
UTZ snacks is what Dennis wanted to discuss. I don't know anything more than you, which is that it's
what kind of snacks?
It's Utz brands, right? So
what do they got? What kind of snacks? Do we eat any of their snacks?
Well,
let's look it up. Spencer's getting us the Utz brand snacks names.
It's pretzels and chips. I mean, that's like
I eat pretzels and chips
popcorn.
sometimes.
Like, isn't that it? Like, yeah, that's it. So
exciting. And
popcorn. Anyway.
I just wonder, is there a trade here just to buy all the SPACs? Like, we knew this was going to become. This wasn't like all of a sudden it just announced it overnight, did it? Didn't we know this was going to become Utz? We've known this for a while.
I haven't known this for a while, but if you're saying it was out there, I believe you.
I think it was. I remember talking about it even. So and now all of a sudden it becomes Utz and it pops 15% because it actually. So is there a play just own these SPACs like the couple days before they're actually going to become the companies? I'm asking. I haven't looked at this, but I'm selective perception here. I'm wondering if there's just a play there. Like you find out the date that they're actually going to become the company. You buy the SPAC a day or two before it and take it into it, and boom. You did that overnight. You're making 15% this morning. You're making even more. It's $23 this morning. Who the hell is trading at 4 a.m.? Somebody really lost a lot of money trading at 4 a.m. This trade $23. Stop. That's like crazy. These algos, man, they're crazy algos.
So a company defines ETFs has filed with the SEC for a SPAC ETF. That would be cool. So it'd just be an ETF of holding companies.
A SPAC ETF. That's not a bad idea.
No, yeah.
I would invest in that because these SPACs are just awesome.
Well, it doesn't have regulatory approval yet, but when it does,
the SPACs just keep going.
Yeah.
I mean, you think about all these SPACs.
What are they? Rip them off for me.
Oh, I don't know. There's like 25 of them. Half of them are electric car companies now. Spencer is the best one. That's Shell.
Yeah,
acquisition, SHLL. I had that thing at 22 and I sold it. I got stopped out at like 21 and it went to 40.
Boy,
blast
it's holding up. What do you think, Spencer? Technically,
I looked. I saw it was up 100%, and I swore. I said, "Stop looking." What do I think? I don't have any thoughts technically. I don't know. I mean, I
got a big position in SPAQ. Here's one that hasn't went. It's the Fisker one, right? SPAQ. I got a big position in this because I just look at it and think probably going to get hot eventually. So I'm been hanging out with this. I'm kind of flattening. I bought 12 higher 12s. It's 13.11 here this morning. I think eventually this one gets hot too. I mean, you can see back in July, eventually these stories just get hot, and when they become the actual companies, they might get popped too. Sometimes it takes a little while, and you got to hang out in these things for a while. The LCA one was a dog for a long time, and it's starting to show a little bit of life, but not like your SHLL. That one's just been a monster, but eventually it seems like all these things get hot.
I also bought GMHI for like a trade last week, and that one has not been good.
What's that one becoming though? That one's becoming something that's not that
well,
cool.
it's autonomous vehicles. It's not.
Well, as long as you got the autonomous part, and maybe we should buy that one too.
I
did.
Don't know. I'm underwater. I did.
Not much underwater. Things only down 50 cents. These things move around, and obviously sometimes. But from when I've been trading these things, eventually they seem to go. I don't know. We're new to this SPAC thing. It's only really been hot for the last 6 months.
Yeah.
So we're still learning a lot here, but I don't mind having a few of these things. Obviously, you can't look at it from a valuation perspective, but they've all got stories, and then they become the companies, and then the story gets hot. You know how I like stories, so I buy that SPAC ETF as long as I'm not paying a huge premium.
Okay,
there's a lot of these things out there.
Yeah, there's like a dozen.
Chat's throwing us DPHC. There's a whole pile of these things. STSD. I don't know if that one is one.
And so Diamond Peak, that's DPHC. Isn't that going to be God, I can't keep them all straight. That's gonna be Lordstown. That's also EVs. So
Which one's that one?
That's the
DPHC.
yeah, that's the company. So Lordstown is the company that like the CEO of Workhorse went and left
Right.
and became
Right.
the CEO of Lordstown. But the Workhorse is an investor in Lordstown, I believe. And yeah, that's like the electric pickup truck. So there's so many of these guys. I can't keep them all straight.
This
And
could be.
they all sound like good. Like that's the thing is they all sound like cool businesses, right? Like DraftKings sounds cool.
That one was a huge money
Virgin
maker.
Galactic sounds cool. Electric vehicles, it all sounds cool.
Yeah.
Right? So I don't know.
That's sometimes all that matters is a hot story, at least in this market so far, unless we really start to, eventually show some weakness here. Overall, the story still is what matters. But maybe we should go talk Workhorse. You mentioned it. This chat has asked for Workhorse here, and we could do some ticker time started early. They've asked for Workhorse here. There's like a dozen people asked about it.
There's a headline this morning.
What is the headline?
They announced, so if you see the chart, the stock is up here. They announced a deal with Hitachi, which will review Workhorse's, operations and provide support and recommendations on their production of their cars or trucks. So,
what a consolidation period. I will say that.
Yep.
You're in consolidation station. If you want to strike, that's when you strike, is when the stock is in consolidation station. I bought this about 4 days ago and it got a pop. It popped like for a couple of days. I sold out of it on the pop because I made like 20% in like a couple of days. And it's come back down to almost where I bought it. Well, it would have at 1639. It's popping back up this morning. 1760. Again, it's all about the contract. Are they going to get that one or not? So I think it's just hanging out and waiting till we get news on whether they get this contract or not. They don't get it, it's going under $10. They get it's probably popping over 30. So that's what it's a binary event. It's, I guess, going to keep hanging out here until they figure it out whether they get this contract or not.
Let's just go with last week's high. I mean, you did sprint over 18 in the pre-market. You have fallen back. Looking at the high from last week, that's way up at 1898. So that's a buck away. A couple other times you cleared 18, got to 19 and a half. That's, major resistance, kind of in a trading range. And it seems like it's doing it quite often. Just hard to pick a spot. I use the pre-market high as an initial target at 1805, but then on the dailies, you don't have a lot up there until last week's high. Great support. Like you said, a lot depends on the deal. Quiet for a long time, man. This thing has been sleepy for a long time.
Okay, let's go. Tickers, pound them out. Lead the way, Mr. Israel.
A few that are on my list and on the chat list. So there's 3 stocks today that have their analyst quiet periods are up, meaning the analysts that underwrote the IPO are free to comment. Those are Rackspace, Rocket, and Big Commerce. RKT, RXT, BIGC. Those are the 3 that I'm talking about right now. Rackspace and Rocket, RKT, RXT, pretty much par for the course there. You're seeing a lot of buys and a lot of neutrals. The one that I'm curious about is Big Commerce, BIGC. You don't often see underwriters come out and give the stock a sell rating, but that is what's happening this morning with Morgan Stanley giving it an underweight. So I'm seeing 7 or 8 ratings here in Big Commerce. They're all neutral with the exception of Morgan Stanley, which is
no buys,
underweight. I don't see a single buy.
That's unbelievable. I mean, that's why the stock's down $13. If all the underwriters come out, they don't put a buy on it. You underwrote this stuff, and now you're telling me not to buy it. And from Morgan Stanley telling me to sell it.
But Dennis,
it's run.
Yeah.
It's run. So we'll give them a little bit of benefit of the doubt. But usually that's very unusual for analysts to come out there and come out with a sell rating on something they underwrote. So, and obviously I'm not following the story. I'm just believing Spencer Israel that they were an underwriter on this, but down 10%. It's deserved. That's why I would think it would go down as something like that, because usually they come out and they're all positive. Sometimes these things go down and they're all positive because we expect them all to be positive. Everybody comes out neutral and one comes out actually negative. That's not good for momentum, I'll tell you that much. And it was an ugly candle on Friday too. Stock opened up. Obviously, we had the blow off top back to Thursday. Stock went to 138, blew off to 162. It's probably gonna be a long time before it gets back to there again. So now it has work to do. Not interested in this at all until, first of all, it stops going down, maybe get a couple lows in the same area, maybe start to turn, because these things don't turn on a dime. I mean, you can look at, obviously nothing to do with it, but AYX is a good example. Alteryx, I bought that fairly early and I took some heat on it. I was too early on it. And, it took like a couple of weeks before it started to show some life. And even at that, it hasn't shown much life. When companies come out and, you have, negative, from the analyst community on it like that,
yeah.
It takes a while to get that sentiment back turned positive right now. So, the overall sentiment to this is turned negative now all of a sudden, and people are caught long. So it's going to take some work to start to get the Momo going back in this one again.
All right, so we got the big C. I mean, if it's had a very big move, it's had about 100-point move, right?
Yeah,
From 60 to
massive
160.
rally, massive rally.
Yeah, maybe you might see that 100 to 110
You could see
area.
100 on
Yeah,
this.
yeah, that might be some potential. About down $14, not too far off the lows of the pre-market session. So it looks like you got a little more to go on the downside. And then what's the symbol for
Rackspace?
Yeah.
RXT. I had it overnight. The reason I had it overnight is it reports tonight. So I always like, how I buy my stocks before they report. And obviously I got lucky. A lot of analysts came out positive on it. I've already sold it because I'll take the immediate buck on it. Just for an overnight trade, it's 5%. It's a damn good overnight trade. But the technicals look okay on this. It's all going to matter what it does tonight, though. I mean, what's the numbers look like? What's the earnings report? So yeah, you've got the pre-earnings run here, helped by the analyst community. What does it do? All that matters is earnings tonight.
Why does that sound so familiar, Rackspace?
I don't know what's in your head.
Don't know.
We don't know what's in Joel's head a lot of times.
Yeah, no one.
I don't know why.
And then Rocket is a stock that we've talked about for a lot of times. We know I screwed this one up. I was in it. Jason talked me into it, which was the right move, but then I didn't like the technicals and I sold it and scratched the trade basically, and I could have made a lot of money. Again, this reports this week too. What day is Rocket report, Spencer? It reports this week.
Well, I mean, they already pre-reported. So
yeah, but we've seen this in Foot Locker, so I like this setup. We know the earnings are going to be good because they're already pre-reported and they were good.
Wednesday after the close.
So there you go. I might actually take this long into the report. I worked with Foot Locker. I might do it again, take it actually into the report because we already know the numbers are going to be good. And the market is just, this is the dumbest market ever that they're like, oh man, the algos, so buy it because they beat. And we already know they're going to beat. They already said it. That worked with Foot Locker like a charm. Unbelievable. It worked with Foot Locker. They announced that they were going to beat. They pre-announced. Then the stock sold off. Then they announced the earnings and they beat and they bought it. I was like, well, we already knew they were going to beat. So maybe this is just a replay. So I think I might buy Rocket right ahead of the report unless it really runs up a lot.
$30.
Big number, but the technicals don't matter when you're coming into earnings. I mean, it's hard. It's all it's going to matter. Obviously, is what do they look like? What do the earnings look like? We kind of know they look good. Wouldn't surprise me if this takes off. Maybe it goes up ahead of it just because people speculating like me that hey, we already know the earnings are going to be good. So the algos are dumb enough to just buy it on the good earnings we already know about.
I mean, yeah, when you're looking at this stock, I mean, how can you not look at Toll Brothers here? And let's just go broad stroke here.
The home builders?
Yeah. I mean, they're hot. I mean, it is the market is just hot, and
the real estate market is on fire.
I know.
Fire for houses, it's on fire.
I know.
And why is that? Because you're like we said multiple things. I mean, people are moving out from the cities to the suburbs. So suburb houses are going, and people are excited to live out there. Maybe it's COVID, maybe it's some of the riots going on. Somebody's making a point. But there's a lot of reasons why people are like more interested in living in houses right now. The housing market's crazy. Like I said, I sold my house and it sold $70,000 above ask. I mean, and obviously, and it's worth it. I mean, that's where the houses are right now. That's not like out of the norm for, at least in Canada, for houses to sell way above the ask. I had 8 people trying to buy my house. So it's a hot real estate market.
And they're a direct beneficiary, and also,
but the driver too on the housing market is the input costs. Yeah. I mean, lumber has taken off. So you have the home builders, Joel. Just to continue your point,
yeah,
the home builders are on fire here too because like everybody, the housing prices and housing prices are going to continue to go up if the input costs on the homes keep going up, because you got lumber, you got labor, you've got everything continuing to go up there. They're building, they were building years ago $200 a square foot. Now it's $300 a square foot. Now in high end it's $400 a square foot. I mean, as those prices to build continue to go higher, it continues to drive existing home prices higher too, because people can look and say, okay, well, I can build this home. It's going to cost me $600,000, or I can go buy the same home that's 20 years old for $400,000. So that's going to continue to drive up prices too, as long as the input costs keep going up. They say we don't have inflation, but holy man, do we have it in the housing market.
Give me the symbol on lumber here. Does anyone know it? I'm looking at for my trade station. I should know this.
I'm not a commodity trader, so I have no idea.
I
know lumber's went up a lot.
What's ETF then?
Try LB. Try LB. At LB.
Okay.
Not L brands.
No, not L brands.
Yeah. When should I sell that, Dennis? No, it's not. It's not LB.
I hate L brands. I've been dead wrong about it all the way up here.
It's not LB. Is it at LL? I know
the
that's.
Chat will help with this. LL, they're saying. Try at LL.
Well, look at lumber liquidators making
lumber liquidators. There we go on the tan. There we go. Lumber liquidators.
Here. The ETF is wood. There you go.
Oh, what an obvious one.
There you go. Look at wood. I'll tell you, that's a good ticker right there. We never did do the good ticker show.
We will.
Wood. Wow. See, there you go. Lumber are going up.
I can't believe I'm looking. I have my trade station pulled up, but anyways, do we have a guest in the background here, Spencer? A little bit early.
I'll be here in a. I'll bring him on in a couple. Let's do one or two more tickers first.
Give them to me.
Let's do Neo.
Go, Joe. You take this one. I'm actually still have a small piece of Neo. I'm going to take this one on because offering $17. They got the price.
Right.
Yeah. There you go.
I should have sold it all. I sold out the offer. I sold out some of the stock in the 19s because I knew the offering. It's announced it. And I should have sold it all. I kept a small piece just for fun. It wasn't that much fun. I know it's down at 17. So you get those offerings, just sell the stock. If it only goes down 30, 40 cents like it did on Friday at one point in time, I think it almost got flat on Friday. That's absolutely ridiculous when the offering was coming. I didn't think it was going to have to go that far in the hole. That's a long ways in the hole. Does that cook the story? It cools it off for a while. So I got a small piece left. Wish I would have sold it all.
Except for biotech. Sometimes biotechs.
Yeah. Well, Neo's doing it for growth too.
Right,
so it's doing it for the right reasons, but it cools them off for a while sometimes. So, this thing was hot, went from 14.50 up to over 21. They do the offering. Immediate cools off story. Nothing cools off momentum like dilution.
And then real fast before we bring on
this one's
Scott,
Joel. Send two to Joel. I just took the last two.
Real fast. Let's do Abbott Labs.
Really never gave anything back. Look at that. You just have it's clear. You guys know how simple my technical analysis is there. As long as you stay above this double bottom here, 109.50, it's all north here. It's nice. It's looking kind of tired. It got up almost matching range day. TradeTheRange.com. 114, 114.20, 109.52, and 109.41. Lower close. I keep an eye 111.29. That's a high close to the move, but almost a little bit of an inside day matching ranges. Go with it on that one.
All right, we'll bring on our guest now a couple minutes earlier. Scott Shellady. He's also known as the Cal Guy. Runs the Cal Guy Group. Scott, good morning.
Good morning. How are you?
We are hanging in there. How has this market been treating you for the past few weeks?
It's obviously, I think August is hard just because we get some weird moves, and it's that time of year. Today's a holiday in Europe, or at least in England. So it's, I would say, treading water. I'm not going to say that we've been killing it, but August was a fantastic month too. So I didn't think it was that easy.
Wait, I feel dumb. What is today? What's the holiday? I don't know.
There's an August bank holiday in Europe.
Oh, okay. Just a bank holiday? Is it?
Yeah. So it's just that will add to less volume, and it can cause trouble. You know how that goes.
Yeah. All right. So, Scott, as far as today is concerned, we were talking earlier about just how maybe Apple and Tesla just could set the tone for the day. Are you watching those as your indicators for today in light of the split?
Yeah, I mean, everybody's been on already this morning talking about Apple and the stock split, and everybody's talking about, well, look, over the last 30 or 40 years, we've lost 50% of our investable stocks, right? So we have 4 times as much money chasing half as many stocks. There's a story there, but that's for another show. But now they've got this stock that's, splitting, and that's going to make it, I guess, a little bit more manageable for smaller traders to get involved. And everybody's talking about what that might do to the stock. But what I find funny, and it's a little bit old-fashioned myself, is nobody's talking about what Apple's doing as a business that might affect the stock, right? So are we searching for something to talk about that is, that dark that we have to think about? Well, if there, way more people are going to be coming to the market to buy the stock, obviously I think the stock's already, it's got its bump after announced. It's had a huge bump after announced. But just because the stock splits makes it cheaper for more people to get involved doesn't automatically mean that Apple's running a better business, right? So I try to separate the two. Just like this V-shaped recovery everybody's been talking about. We've absolutely had the V-shaped recovery, but it's only been in the equity market. It hasn't been in the economy.
True.
And that's a tale of two cities. And I would say this, I'd argue the fact that I think our economic indicators have actually weakened a tad over the last 3 or 4 weeks rather than strengthened. It'll be very interesting to see what these jobs numbers come in on Friday. But we've had, everybody asks me all the time, how can we have, the stocks where they're trading? Look, I've been standing on a soapbox preaching into the abyss. We've got these governors running our economies at 90 miles an hour into a brick wall, only allowing our service sector to be open at 25 to 50% of their revenues, basically, and then having to pay 100% of their overheads, taxes, and rent. And I just think that's absolutely insane. And I know we've got this aircraft carrier of job losses. We had American, report last week that they're going to be firing 19,000 people because they're running out of this. The government program money's running out. That's going to continue to happen here. So we really have to start doing better, or that aircraft carrier of negative news is going to weigh on us, I think, a little bit. So I think that's why you've got the VIX a little bit twitchy. And I think that to any number of things out there that are telling me that, I'm getting more of a flashing yellow, because we're $5 trillion is the answer to why we're here. That's it. If you maybe I told you this or not, but if you take a million seconds, put them back to back to back to back, that equals about, I think, 11 and a half days. A billion seconds back to back to back, if you spread it, that's like 31.75 years, 31 and 3/4 years. A trillion seconds, 31,710 years.
But at the same time, we've come all this way. Anyone just who's been sitting on the sidelines is just been out of luck, and they've missed it.
I know. It took me 25 years in the market to realize there's two different things out there: what should happen, what's gonna happen.
Right. And what's happening?
And then, what's happening is that the government. You cannot tell me that this economy is firing on all cylinders and it's 100%. We're better than we were because we got stocks at an all-time record high. We are where we're at from two simple reasons: $5 trillion, or whatever it comes out to be in the end, and the Fed that said that they're going to be there to backstop it. We're not raising rates until we're all about 106 years old. That's the reason. Fundamentally speaking, these companies are doing better. They're coming off of a lockdown. We're all excited about it, but we're not anywhere near where we need to be. Look at the restaurant. Look at how bad it's going to be. I go into Chicago to do TV shows 3 days a week. The concourses of all those major buildings that have 3 to 6 or 7 little shops that need to have that building full for them to even make a little bit of money are all gone.
Yeah.
We're not even talking about that. Okay. So all of the small businesses, the 20% out of business, no way. It's way over 50 if you ask me. So I think that's going to continue to, we really need to start catching up here, or you're going to start to see this news really roll over in my mind. But hey, $5 trillion covers a lot of ills. There's no argument in the huddle when you get $5 trillion.
Okay, so Dennis, go ahead.
I was going to say, how much does inflation play? Obviously we've seen still the consumer still wants to buy things. They're still out there. They're just buying in different ways. Like, it's definitely not good for these concourses, and it's not good for physical businesses that have storefronts because people aren't going to stores as much. But how much does inflation play into, even what we're seeing in the equity markets?
I think we've got inflation out there. We're just not measuring it, and that's always been the case.
Yeah.
Oh man,
that's been the case for 50 years. And the government and the Fed's trying to buy inflation, right? They've been trying to buy inflation since 2008. They want to have that problem. They just can't get it.
They should just throw some things back into the index, and they'd have inflation.
Right, exactly right. And every administration since 1940s just played around with what is in the inflation calculation because they always are worried about it. But that's another show. But before I came on, you were talking about the housing market, right? And by the way, be careful about lumber. It's a CME product, but I mean, there's not a lot of people in there. So it's like Hotel California. You can get in, you can check out. Right? So be careful about lumber. It's a great product, but again, Hotel California. But number two is that, look, part of those inputs that you talked about are the 30 years at what, 2.8, 2.9 mortgages?
Yeah.
Okay, so we can say the housing market's great and that looks good for the economy, but the housing market's great. A lot of it is due to the fact that you can get a really cheap mortgage now, but why are rates so low if things are so great?
Yeah.
So you have to check yourself and go, wait a minute. If we were really killing it, there's no way you're getting a mortgage of 2.9% or even 3%.
Okay, so Scott, so where would you go with your money though? That's part of the question. Is there is nowhere else to go with your money?
I wrote an article this week and it's the name of my high school band, Tina, FOMO, and the Fed, right? I mean, that's what's behind this. There's no other alternative. We're afraid of missing out. And so we've got everybody crawling over each other because their investment skills now are just worried about the thing going up and they weren't involved, whether it's good or bad.
Yeah.
And the Fed is there and they've said that they're there to backstop it. So you just have to take a little bit of a reality check. Look, we have the world's largest, arguably the largest economy in the world at 22, 23 trillion, but we've got a 10-year interest rate at 73 bips. I mean, think about that. And a 30-year at 2.9% when it comes to mortgages. I mean, so I just, these jobs numbers are going to get more and more critical, and it's going to have a large part to do with the election as well. That's going to be a great wrench to throw in there, which is going to give us all opportunities. And yes, cash is an asset class, right? We always can remind ourselves that that's the case. You don't always, I'm one, I've been involved with a money management firm. I understand the arguments versus trying to play the market versus being in the market all the time. But I think that this has been an historic run. Look, it took us 103 years to get 10,000 points on the Dow the first time around. We did it in 5 months this time.
That's crazy.
And I don't think it's just, you just need to sometimes check yourself and look in the mirror and go, "Ooh, this is kind of weird."
What about gold? Where's gold playing?
This is another one. I love how you guys admit sometimes you get stuff wrong. I'm not a gold bug.
Okay.
And so what happens is this: my only talking point for gold over the last 6 weeks was, hey, if you've had it since 2011, you just broke even. Have a party, right? So look what the stock market's done since 2011, and look what your gold's done. You just got back to break even, but the stock market's gone up 300%. So that's kind of why I'm not a gold bug. But I also do understand that if we ever do get inflation, and that's why people run out and get gold on board, inflation is going to affect things that hurt when you drop them on your foot, land, gold, that type of asset. And so as long as even though we've seen gold make its move, it's still back to prices that we had 9 years ago.
What about crude? What about crude? I mean, you're looking at some of these stocks. I mean, they're like, hello. I mean, I don't want to go negative 40 because it really didn't trade there. It's gone to 8 to 43, 44. They're still full. Why are they still full margin on crude? This thing is dead in the water here, and the stocks are worse. Talk to us about energy stocks.
You're exactly right. And that, what that tells me? That tells me that nobody's expecting any serious inflation anytime soon. That's a great indicator. I like to see what those prices are going out. And it's just telling us that we don't think anything's going to go crazy anytime soon here. So again, you're right. That one is another one where, boy, if things were really that great, you'd see oil start to really tick up significantly. I mean, we're still underneath where we need it to be to make some money. And so that is a great indicator. The 10-year yield's a great indicator. Those types of, that 30-year mortgage, 30-year mortgage at 2.9%. I mean, what's the difference between 2.9 and 3.2? A couple of beers a month, right? Depending on what your mortgage is. That still tells me that we're not doing very well. And I don't think, arguably, yes, we had great unemployment numbers going into this pandemic, but there were some cracks anyway. And so we need to kind of find a way to bring it all together. And I think that, yeah, you could tell right now that I've got the flashing yellows on big time. I think that the things come so hard, so fast. If Granny died tomorrow and left me $5 million, am I going to try to earn the corner office by putting it in the market right now all at once? Probably not.
And election too coming up.
Right. I mean, you're going to get opportunity. You're going to get great opportunities. but I don't think I'm all in now for sure.
One more. The banking sector. It seems like the XLS. It seems like these stocks are owned for a couple days and then they go right back down. And the way you're talking about, talking about interest rates going up anytime soon. JP Morgan, the best in breed. What are you looking at in the banking sector?
I'm a Debbie Downer there. I think
okay.
I think that we can run to zero rates in the States. I really do. I don't think, obviously, and then that's, no one's going to give me a trophy for saying that when we're only 75 bips away, right? And with no big deal. But I think that you'll find, and I think that that's what the 30-year mortgage rate's telling us and what the crude oil is telling us. And that even though we've had some, look, we've put 10,000 Dow points on in 5 months, and we've seen the 10-year yield go from 0.63 to 0.73. So I think they're going to struggle. The banking, any business that relies on part of their cash flow from decent interest rates, and a lot of them got a bid when we looked like we were starting to raise interest rates a while back. I think that they're going to struggle. I think that's going to be a difficult thing. Although, Buffett overnight put some money in some Japanese banks, so maybe he sees something that I don't. But they're the classic example of not really having any, traction because of low interest rates.
All right, Scott Shellady is the founder of the Cal Guy Group. Scott, thanks a lot for the time.
All right, guys, have a great week. Thanks.
All right. While we were on with Scott, Novavax announced a deal with Canada. The government's going to buy 76 million doses of their vaccine. So NVAX popping off that headline, though it's off the highs.
I think all Novavax rallies to be sold.
Yeah.
I took a lot of heat when I hated on this at 150. It's 107 now 113. I still don't like Novavax. I think the story is over.
All right.
GE.
Yeah,
I just want to say
we're going red here. Hold on. We're going red here a little bit.
We haven't given any love to GE this morning, and JP Morgan's TUSA has not given any love to it either. He sees the fair value below $5 and has pulled his price target altogether now. So, I mean, we know this is one of the big bears on GE, and he is saying there is a lot more downside potentially here.
You know what? TUSA and John Inch were the two that we listened to. Maybe we should ring John up from Gordon Haskett.
Yeah, because we've had John on the show lots of times.
See where he's at on GE.
Yeah, get his thoughts here again. I said I will not get bullish on GE until TUSA and Inch both get bullish, and that has just not occurred. Okay. So I look here. GE has not participated in the rally whatsoever. Not at all. And it's down here today, probably deservingly so. This is the quiet story. The stock actually could really get smacked. You have another analyst. It's got to be. At what point in the time do you throw in the towel on this?
Yeah, why would you still keep covering it?
Well, and what point in time as an investor? So many people who are investing in GE and they think this is going to be a turnaround story. We've had a new CEO and we've tried this and we've tried that. The company's just done everything wrong for a decade or longer. So it's hard to just turn this around. There's so much debt. There's so many issues here. I mean, I look at Honeywell in comparison to General Electric and you think, wow, at one point in time, a lot of overlap in businesses here. And now, geez, I don't even know what they are anymore. So
light bulbs.
Light bulbs and appliances that work forever.
It just
that's their problem.
Well, there's a problem with that too. You're right.
Yeah.
Yeah.
Planned. What do they say? Planned obsolescence.
Oh wow, Dennis, going deep into the high school. Actually, I use that in college for military, talking about military work. But I don't know. We got a little fade going on here, folks. A little bearish talk.
Keep an eye on Apple and Tesla. Keep an eye on them. They're fading too. They are down significant pre-market highs. I believe they go red today.
All right. I don't get paid unless we hit 300 likes per episode. So I want to see.
Oh, man. I'll help you out here.
It's 159.
I was the 159th one. I was the 159th.
I appreciate your support.
I liked my own show.
I appreciate your support. All right. I want to thank our guest, Scott Shellady. Thanks to all of you in our chats. There was the chat on YouTube. There was the chat on benzinga.com/premarket-prep. And there was the chat on Benzinga Pro. You can always catch a replay of our show on YouTube or on our podcast, all the major podcast platforms. Please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Joel and I will be back at 3:40 p.m. Eastern Time at the same place. Until then, everyone, have a good rest.
You got paid 307.
There we go.